let's get started. Week 4 chart patterns. Very excited about today. This is going to definitely help you start to put yourself in a good mindset to be ready, right? We understood the lingo. We started to get a better idea how to play. Then we talked about the risk. And now let's get into the chart patterns. I think this will be really beneficial for you, and I think you'll really like today. So today we're going to talk about just identifying and interpreting key chart patterns, head and shoulders, flags, double tops, bottoms. I'll explain how to use these patterns to predict price movement and more informed trading decisions. Again, the whole goal is for you to just be the edge, right? How can I give you a little edge compared to everyone else instead of you YOLOing? So let's get after it. Looking forward to it. So what exactly are chart patterns, right? The definition of a chart pattern, honestly, is just a visual representation of the price movement on the chart. And again, the whole goal is that you must be able to identify these 3 different items: an uptrend, a downtrend, and sideways. Until you can identify one of those 3, everything else will not matter. You've got to be able to say, are we making higher highs and higher lows, right? Are we working our way up? Or are we making lower lows and lower highs, okay? That is the whole decision on what we're happening here, right? Uptrend, we are moving in the right direction to the upside. Downtrend, we are moving to the down. And of course, sideways, you're not making any higher highs or higher lows. You are just going sideways, right? If you can identify those 3 basic steps, you are going to see what exactly happens, right? So let me continue so you can see how we're rocking, and I'm very, very excited. So, all right, now, why will this help you, right? It's going to help you predict future price movement. And that's the whole goal, right? If you just have that edge, 2, 3, 4, 5% edge, that's what's going to put you in a better determination, right? The whole goal of trading is to enhance your decision making for the entry and exits. You never want to go, is this a good time? What about now? What do you see, right? If you see that you're not prepared, you have to be prepared. So you're looking for that. So the first step in understanding a chart pattern is you got to know what direction are we going, up, down, or sideways. Soon as you can identify those, the patterns start to make more sense. Okay, so let's get into the patterns. But before we get into the patterns, I do want to kind of sidestep for a second, and I want to kind of teach you how to read a candlestick. Okay, the most basic and easiest way I know how to teach you, because next week on week 5, we're actually going to go in depth about candlesticks, like really teach you everything. But this is just a high level, right? I want you to understand that there are basic in the beginning, right? When most traders start trading and open up a chart, the default candles will be green and red. Green for bulls, red for bears. It's basic, right? You can then change it to whatever colors you want it to be, right? And most of them will be candles. There are other types of candles. There are lines, Hadoku, open columns. There are just ones that tell you the high and the low. It's on a wick to tell you that. But most people learn from these, right? They understand what's happening, right? So let's look at this candle, right? When you pay attention to what's happening in this candle, okay? So we have, for an example, a green candle, which is a candle that's going up, right? The price opens at here, and it might dip down, but nobody buys, and it starts to work its way up. Buyers are happening, trades happening, things are getting bought. Stock is moving to the upside. It keeps going. And then you get to the point where you might have a top wick where buyers are trying to see if there's, or sellers are trying to see if there's buyers there, and they're just kind of shooting it out. All right, they're like, maybe somebody can pay, like for an example, let's say this is $100 and the top of the close is 99. They're just trying to see if somebody will take the 100 and do it. So maybe it opened at 97, this is 98, this is 98 and a half, and this is 99, and this is 100. And they couldn't get anybody else, but it was great. It was a solid candle. Now, Opposite, of course, the same way. You have a red candle, so people that are shorting a stock, it opens here. Let's say they try to push it back. There's no buyers, so now they are shorting the stock. It's going down, it's going down, it's going down. And of course, the same thing, right? They're just casting the net to see, will anybody take this? So if this is 98 and this is 97, nobody took it at 97, but they were able to get it between 98 and 99. They were able to secure people that were able to give it up and short it. Now, candlesticks can be on all different time frames, right? 30 seconds, a minute, 2 minutes, 5 minutes, 30 minutes, an hour, 4 hours, a day, month, week, year, right? All different stuff. The higher the time frame, the better the candlestick, right? The more clear in what's happening for that. And we're going to talk about reading that at the end, but next week we're going to go really in depth. I just wanted to give you a general idea of how you can read this body, right? You have the open, right? Right there. You have the open, and it works its way down, works its way down, works its way down, and then nobody bought it, and it ends up closing, right? So that's how a candle works, right? Sometimes the candle might open and go up, go down, go back up, then come all the way down and close, right? Just depends on that time frame on what exactly happened during that item. So pretty excited about that. So let's continue our mission of excitement. So again, why does it matter? It helps you start to determine patterns in that direction. So if a particular candle starts to shape in a direction for you, it will help you move in the right direction. Okay? Now, again, simple, high level. Next week we're going to go full in depth on it. So let's continue on. Okay? Now, what are some types of chart patterns that you should start to learn? There are two types. We have reversals and continuation. Okay? These are the ones you must start to learn. You must start to ingrain and you must start to work, right? Let's talk about the first one, which is reversals. Okay? This indicates a change of a direction. So, for an example, we're working our way up and all of a sudden we're now working our way down. Okay? You have to look for certain patterns that will give you things that will happen. So, for an example, double top, double bottom. And we're going to go into depth on these, but I want to give you an idea. So let's assume that this is the open, and it opens up, works its way up, and it makes the first high. Okay? Makes the first high of the day. We see it all the time. Then, of course, it starts to do a pullback, and all of a sudden it finds some support, and it pushes its way back up. And let's say it fails at the high day. Somewhere around the high day, it kind of fails. Well, if you were paying attention, you would put a line at the mark that worked its way up, and as soon as it broke that line, you play the puts. Okay? It's craziness, but what I want you to do is I want you to start to get really familiar with one reversal and one continuous. And we're going to talk about this the whole time today. And I really want you to go back and just back test and look at the last 90 days of your favorite ticker and count how many times you found a double top or a double bottom in the time frame that you like to trade. Okay? And I want you to go through it, and I want you to mark the V. I want you to mark the spot that has the top and the bottom and the top, and I want you to mark the entry here. And what you're going to see is that you are going to be more profitable when you wait for that entry instead of being early. And you're going to see like, holy smoke. So we're going to go in depth on it, but I want to give you that idea. Other ones, head and shoulders. We're going to talk about that one. It's like the first, it breaks through, makes a new high, comes back down, doesn't break the left shoulder. Boom, you play the put down there. Rising wedge, right? You have a push up, comes back down, makes a higher low, higher high, higher low, higher high, but it's getting really, really tight. It's like not going anywhere. And then boom, it fails, right? Fails. Same thing with an expanding triangle, right? It's like it's really tight in the beginning and it's working its way and it's working its way and it's trying to push, but it keeps coming back and it pushes it. And when it breaks down, you play the put. A bearish triple top. This doesn't really happen all the time, but it is out there, right? And you have not a new high, not a new low, not a new high, not a new low, not a new high, and then all of a sudden it finally breaks through, boom, you play the put. And here's just the opposite, right? So this one was the uptrend, became now down. This was a downtrend, and became an uptrend. And these happen all the time. Okay? Let's keep looking. Here's the other one. This is a continuous, right? So we talked about the reversal. Reversal is flipping the other direction. This is continuing in that direction, right? You might hear me all the time where I'm like, I think they're just taking profit. This doesn't mean that they're all of a sudden reversing. There's not a confirmation or a chart pattern that tells me that we are now reversing. I think this is just consolidation. They're just taking profit, and we see this all the time. So here's an example. The bullish flag pattern, right? You have a quick push up. It's like boom, 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 boom. It pushes up, and then all of a sudden we have this small little tight area where it's like not going anywhere. It's like they're staying together. It's not making anything. It's not really doing anything. It's staying really tight. And then all of a sudden it breaks the trend and just rips. It's like, whoa, what just happened? Well, it waited for that spot to build up. And we're going to talk about this volume, and it rocketed out of it, right? Same thing with a pennant, and same thing with a falling wedge. They all have a big move of some sort, and then it's a really tight area, and then boom, it goes again. It's craziness. And again, same thing. We have a down, we're trying to see if we can push it back up, and we fail. Down, we're trying to see if we can push it back up, and we fail. Down, we're trying to push it back up, and we fail. And it happens all the time. Now, remember what we talked about. I'm going to say this over and over and over again. You are not going to be an expert on remembering all of these. I want you to pick one of each and just be an expert on that. And then when you're an expert and you can see it all the time, we move to the next one. This could take you a while, months and months and months, and starting to see it and seeing it live. You're like, oh my God, it's a pennant. Oh my God, it's a wedge. Holy crap, it's happening, right? I'm going on 6.5 years, and I'm still working my magic as much as I possibly can of learning the patterns. I am putting as much work as I can in every day to get familiar and just be so good at it, because there are hundreds of different patterns. But I'm trying to teach you the highest ones that you will see the most, that you can start to use in your advantage. And if you've seen me trade live, I don't have anything special on my chart. I have moving averages and volume. That's all I have. And I'm watching the patterns, and I'm looking for confirmation, and I'm looking for patterns, and I'm in and out of a play, and I love it. All right, let's continue. Now, here, let's talk about more in depth of an actual head and shoulders, okay? I want you to see what's happening here. So here's an actual head and shoulders, okay? You have, in the beginning, it's a normal day, kind of just trending, and then we finally have a breakout, and it kind of makes it first kind of high, and then it comes back. Okay, it's like bang, it didn't make anything special. We've seen these, like, there's nothing really special going on, and then all of a sudden, it makes a nice little move, and you almost think it's going to be a double top, but no, it pushes way through. You're like, all right, cool, great. But then it has a little trouble, and then it falls, right? And it falls below the shoulder. So as you can see, you had a push-up, failed, push-up, failed, and as you can see, this sucker fell below, and then you're paying attention. You're like, all right, left shoulder is completed, the head is completed. Is the right shoulder going to complete? And it doesn't have to be a perfect round. It just has to be around the spot. What I mean is, like, it just needs to not really close way above the left shoulder. So as you can see, this one tried to go up, failed, tried one more time, then failed, and that neckline is where you enter the put. So sometimes this might take all day for it to happen, and you found the perfect entry at 2 p.m. Eastern time, and you just made 2 or 3 or 400% because you finally waited for the perfect play. You didn't get stuck in all of this. You looked for the perfect play, and that move right there, well, dipped $5, and you just made a fortune because you let the play come to you. Now, there are 3 spots that you could get into this, right? The first 2, I do not want you to do. The third one is where I want you to do. The first one, you are taking a very, very, very lucky guess that this is the top, and you're playing a short, okay? You failed. You see that it failed to get over the shoulder, so you're playing a short, okay? The reason why I do not want you to do this, I've seen way too many times where it fails, and then continues on, and you got absolutely chopped up, okay? The second is where you think you're like, maybe I'm close. I can get in earlier. It looks like it's about to dip down. It's a candle right before the neckline. You're like, cool, I'm going to get in. And I've seen this too. Let's say you got in at 50 and it gets to 55, and then all of a sudden it's back up down to 35, and you're like, oh man, I'm down 15. I'm probably going to get out. And you just really screwed yourself. Where if you just waited for the perfect entry and you got in at 45 because of the time decay, and now you're in at 45, and holy smokes, you get out at $200 a contract, and it's a phenomenal play. That's what I love about chart patterns, because if you let it play out and you know where the entry is, you just let it come to you. You don't have to wait. Now, sometimes it doesn't happen, right? Might get up the head, might get over the shoulder, and then it'll continue on. Not a problem. It's a void play. It's a void possibility. Okay? All right, let's keep going. Double tops, double bottoms. These are the ones that I want you to learn first. I want you to get really good at these, okay? And I really, really, really think that you're going to be very, very happy with these type of plays, because you will know where to enter, okay? Here's what I see most time. We have a nice push-up, make your first high of the day, and then it comes down. And sometimes the come down doesn't have to be far. Let's assume this little line right here is $100, and this neckline is 98, right? So $2, okay? So let's say it gets up to 100, comes back down to 98, and then finally pushes back to 100, okay? What I don't want you to do is take the put when it fails at the 100. That is not where you want to end, because I have seen it reverse at 99. I've seen it reversed at 99.50. I've seen it reverse at 98.75. It's not to the number. You mark out the line that calls the push back up. It's not hard to see. You clearly will see where you major up, it came down, and it's pushing back up. Okay, when it pushes back up and it tries to get to the $100 and fails, I draw my line at 98 and I wait for the play to come to me. And sometimes the play comes fast. Sometimes it like goes. It's like 99.50, 99, 98.50, 98.25, and I'm like, hey, I'm ready. As soon as it hits 98, I'm playing the put. I'm playing the 97 puts, and boom, I play the put and I write it down, and it works out great. What I see people is they try to do this earliness, right? They try to get in early and they get faked out. You don't want to get faked out. The neckline is your entry, not when it touches the 100. It could easily, next candle, blast right through 100, right? And absolutely good, okay? Because remember, you're waiting for the pattern to form. Top, neck, top, entry, boom. Same thing with the opposite, right? You have the push down, it pushed down to 98, it pushed back up to 100, pushed back down to 98, and now I'm playing calls above 100, and boom, I play it. Now, here's other examples of double tops, right? You have a push up to 100, pushes down to 98, but let's say it gets to 125, 150, right? And you're like, oh, okay, it's breaking through, but then fails, and it fails hard. You're like, oh, look, they were trying to catch people playing the breakout of the high day, and they caught them. They caught them. So you mark out your neckline, you wait for it, boom. Again, this doesn't happen all the time, but I'm pretty sure you have seen it. You're like, I'm going to play the break of the high of the day, and boom. And 2 seconds later, it's like 99.99. You're like, man, because you just got to let it play out, okay? I've seen ones where it's done this, where it breaks up to 100, and it stays between 99 and 100. It just keeps staying there, right? Until it finally comes down to 98, and then you finally see the move to the upside to try it, right? It's like, it doesn't get anywhere close to the 100, but it just kind of consolidates there. Maybe it stays at 99 and 99.50. It just kind of stays there. And then finally falls to 98, and then all of a sudden tries to have this big push back through 90, 50, and then boom, it's at 100. And you're like, oh, okay, cool. And then fails. And now you're looking to play your puts at 100, or at 98. So prove yourself, push yourself on the double bottoms, double tops. That is where you want to be. That's where you want to push yourself. That's what I'm excited about these items. Okay? All right. Let's keep pushing. Okay? Let's push. Let's push. Now, we talked about reversal. Here is good ones for you to focus on and the continuous ones. Flags and pennants. I don't care which one you focus on. I just want you to be an expert on it. Eat, breathe, and sleep these, okay? If you can handle double top, double bottoms, and learn flags and pennants, you are going to be better than 95% of the traders out there. I'm telling you right now. You will be like, wait, that's a flag. That's a flag. That's a flag. That's a flag. I know when to enter, right? So same thing, flag. It's a small rectangular. It's starting to, it's starting to work itself, and then boom, it pushes out. Same thing on a down. You have a sharp down, and then it's like this really tight area together, and then continues down. Pennant starts to look like it's getting tight, right? Remember, this is rectangle. This looks like a getting close to a triangle. Okay, it's like, man, as soon as that sucker breaks, we're gonna get to play. And the same thing to the down. Now, the number one thing that you may or may remember is like, what is causing all of this trades to happen? Like, what do I need? What am I missing here? You're missing the most important thing, which is volume. Okay, until the volume picks up, none of these plays will happen. You must have the volume. You probably had a big volume candle here, and then it's garbage candles. Nothing's happening, nothing's happening, nothing's happening. And then all of a sudden, you have the volume put through, it breaks through the trend, and boom, you play the uptrend. That is what I'm really excited about when it comes to when you get really good at price action, you get really good at volume, you get really good at understanding the candles, and you get really good at patterns. And then it just starts to come to you. You're like, all right, cool. I don't really need anything else. I don't need RSI. I don't need MACD. I don't need anything else. I can do this because I see what's happening. What are the candles telling me? Like, what's the story that's trying to happen right now? Are they trying to push it up? Are they trying to push it down? Are they trying to wiggle the retail investors out? What is the candles telling me? And when you can start to see that, it's game changer. Okay, absolute game changer. So let's look at this this part right here. Right, I want you to look at this candle, like look at this actual chart. Right, so we have a let's say it opened up and it came down a little bit, and then it started working its way up. Right, it started working its way up. So you have a nice push up, and then what is it doing? It's getting really tight, right? Not making new highs, but it is making higher lows. You're like, oh my gosh, I'm just waiting for it to break this line. And when the volume picks up, I can play the calls. And you play the calls and it rips. And you're just like, money, right? Now, consolidates here and then it fails pretty hard, right? Kind of fails back down to the day, but it kind of looks like it found support right at open and it works its way back up. Now, it works its way back up, but then what does it do? It doesn't make a new high. It's making higher lows, but it's not making lower highs. So you're like, wait, I've seen this before. I know I just need to wait for it to break down here. When it breaks through here with the volume, I play my puts, right? And again, these candles could be 5-minute candles. So this might be 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60, 65. It might be 70 minutes before the play comes, but you're ready because you're like, all right, you might not see it at first. You're like, all right, cool, it didn't make a new high. Okay, cool, it didn't make a low. Whoa, it didn't make a new high. But wait, it didn't make a new low. I can draw a line, and I can draw my lines, and I'm like, I'm just waiting for it to happen. All I'm doing is waiting for it to happen, and boom, I play my put. It's pretty cool. It's really cool. Again, practice. You got to practice. You got to practice. You got to go look at it. You got to look at the candles. You got to look at your particular item. Like an example, if you love the trade SPY, you're like, I love SPY. Then go to SPY and go to the 5-minute candle and go for the last month and go day by day. Just go day by day and see if you see any patterns that jump out to you. Double top, double bottoms, flags, pennants. See if you see any of them. And some of them you might not see them, right? You might not see it for 4 days in a row. You're like, man, I have nothing here, nothing going on. Totally fine. But then there's the 5th day that you see the double top and it works out perfect. And you're like, holy Jesus, if I would have just waited until this day for the play to come to me, I could have made a freaking fortune. Happens all the time. All right. Support and resistance. Again, I just want to kind of give you a high level on this because I'm going to teach you a boot camp on how to find support and resistance. But what exactly is it, right? Support. It's just a price level where demand prevents further decline. It has where buyers step in and buy. For an example, if SPY for some odd reason is close to $500 and the ticker comes down to 500, you see a massive influx of buying because it's a support area. It's a number that everybody likes and they buy. Resistance is the exact same thing. They get to a particular area, they're like, you know what? If I bought it at 500, I'm going to sell it at 510. I'm making this up. 510 is your resistance. Everybody sells at 510 and it comes falling back down, right? That's how you see your kind of support and resistance. Now, how do you actually see it on the chart? If you kind of just zoom out and look at the day, you can kind of see where a particular stock has problems getting over and then fails. And then it comes down and it finds support and it pushes itself back up. You can easily see that if you just zoom out, right? Just zoom out and kind of look at where what's happening, right? Look at it at a higher time frame. And we're going to talk about this. The 4-hour time frame when I'm charting and I'm looking at support and resistance, this helps me drastically have an idea like what's going on. There's plenty of other ones. There's Fibonacci's, there's pivot points, the high and the low of the day, bouncing off trend lines. I like it to have 2, but 3 times on a line. I love it. I love it, right? And when we talk about trend lines, and I teach you that, we're going to talk about that. You either can do it by the candle or the wick. You don't want to do candle, wick, candle, right? Just pick the direction you're going to do. And remember, you might be correct, I might be correct, but we're never going to be perfect together. And that's totally fine, right? If my trend line is, I'm making this up, 100, 101, 102, yours might be 100, 100.98, 101.84. Totally fine. We're both right in our minds, and we're going to play it, okay? Let's keep going. Most important thing we've talked about, right? We have identified that you must know up, down, or sideways, right? We've talked about that. We talked about picking, becoming an expert at a double top, double bottom, took flags and pennants, and then now we've talked about how to identify the breakout. The breakout will happen with volume. You will see it all of a sudden pick up. You're like, holy smokes, there's the volume. That's what I've been waiting for. Boom, it breaks out. Okay. Prime example. You have your big push up on your flag here, right? You get your push up, and then of course it doesn't make a new high, but it doesn't make a new low. It doesn't make a new high, it doesn't make a new low, and it's getting really tight, right? And so you can see that we are tight between support and resistance, and you're watching the volume on that particular candle on that stock. You're like, oh my gosh, and then all of a sudden, the stock volume picks up. And boom, when that sucker breaks through, you play your calls and you ride it because you finally have the breakout, right? Because the volume came there. You never want to do it until the volume changes. Now, here are 3 kind of general idea for you to pay attention to, right? How do I know when I see a fake out push, right? I usually see a fake out push when there's only one big spike of volume and then the rest of the time is kind of junk, right? You've probably seen this. This right here in the middle of the average, that's what normal stock kind of looks like every day. It's kind of like an average stock. You might have a real big up in the minute and first the market opens, but the rest of the day, it's kind of normal until it kind of dies off for the day. But you can kind of see like, okay, it's kind of been average. And all of a sudden you just get this random spike of volume. And that's where people are trying to push it. And sometimes what happens is you have this, maybe a big random spike up, and then sell, right? Because the volume's not there. It's like there was a whale or someone was trying to push that particular stock up and nobody came with it. So it kind of a weak trend, right? Average trend. Now, if you see the first candle push and the next candle push and the third candle is that volume, yeah, that's a strong trend that's pushing in the right direction. So not hard to see. You can clearly see that at the bottom if you have it on your chart, or if you don't have it on TradingView, you can clearly see volume. Use it to your advantage. And again, this will take time. This will take time. You must eat, sleep, breathe the charts. You must be in it. If you're going to do this full time, you're going to put this that I'm going to take care of my financial future of my family. If you can just learn how to read a candlestick and understand what patterns that you see and understand volume, you will be a phenomenal trader. I promise. It has taken me a long time to get that down pat, and now I am consistently day in, day out, right? Because I understand this. I eat, sleep, and breathe it. Take care of my family, moving us in a good direction, and that's all I want to do for you. Okay? Now, what are some common mistakes that you see with the chart patterns, right? I see this all the time, and I'm always like, gosh dang it, I wish they wouldn't have done that. But they're trying to force the pattern. Force the pattern. There you go. Sorry about that. They're trying to force the pattern to fit their narrative, okay? So think about this, right? They are wrong time frames. They are ignoring the volume. They're doing this, all of this craziness. They're like over trading. They're doing this craziness. So for an example, they're like, oh, I think this is going to be, a flag. And I'm like, okay, great. Well, the flag's going on, but then there's no volume. And so they play it. They think it's a breakout and it's a fake hit and it doesn't go anywhere and you're pretty much screwed. That's what you don't want. That's the worst feeling in the world, right? Ignoring the spikes in the volume and over trading, basically trying to fit certain characteristics of a pattern when you're not realizing what's going on, right? Those are things you do not want to happen, right? Those are like, oh man, craziness. So common mistakes that I see all the time is that, hands down, just ignoring what's happening. Now, the last but not least is probably the best picture. I have it on my wall. I pay attention to this all the time, okay? There are the simplest ways that you can look at a stock just as take you about 5 minutes in the morning to kind of give an idea, right? The first thing I do when I look at my stock and I'm starting to develop my watch list is I go look at the 4-hour candles, okay? And I go look, what is it doing? Uptrend, downtrend, sideways, right? I can start to look for key levels, support and supply and demand. I'm kind of getting an idea. So I can like, all right, cool. We're in an uptrend on SPY, right? I'm like, okay, I can see SPY. Then I go to the hour and I start to kind of develop my levels. I read any fair gaps, any liquidity I need to pay attention to. Is there reversals? Are we breaking to a particular upside from what I saw in the 4-hour? Do we have an opening range breakout? Any of that stuff that I should start to pay attention to, I'm starting to look at. And then I kind of move down to the 15-minute, the 5-minute, the 2-minute. I'm kind of looking for confirmation. I'm like, all right, cool. If this thing breaks, I'm making this up, 550, I'm going to play calls. And if this thing loses 547, I'm going to play puts based on my read of the 4-hour.